What's good? What's good? What's good, everybody? Welcome back to part seven of 160 to $1,000. Um, I am profitable. I have been consistent with profitability, or being profitable as a trader, and I'll show you guys the proof. It's on my trading journal. So I'm gonna share that with you guys. I'm finally becoming a profitable trader. You guys are seeing it live here. I share all my ideas. I share all my, analysis. Typically these YouTube videos that I drop, you see my analysis. Um, but I also drop my ideas, my stop loss, my take profit in the Discord. So if you want to see if you can get access to the Discord, click on the link. Link is in the bio. And furthermore, I always, well, or most of the times, just in case in the future I miss out on quote of the day. But the quote of today is by Mark Douglas, as usual, which is in The Disciplined Trader. He says the past does not exist anymore and the future does not exist yet. What does exist are these seemingly endless sequences of now moments in which we experience our lives. Let me know in the comments, drop in the comments down below what you guys think of that quote. I'll tell you what I think about that quote. So, what I think about that quote is focus on now. You can't spend all your time thinking about the past. You can't spend too much time thinking about the future. Whatever is happening at this moment, be present in the moment, be intentional with your time, and then you'll be able to maximize opportunities in the future. So, and whatever opportunities that you invest in will create a better life for you going forward. And then you can always look at the past all you want in the future, which will be filled with blessings. So that's what I think about the quote. Let me know in the comments what you guys think about that quote. I'm gonna get into it. TradingView, TradeZilla. I mean, we could look at, Forex Factory, excuse me. But I'm actually very glad and grateful that I'm becoming a profitable trader. I mean, I always knew I would. It's just a matter of time, and it also was a matter of journaling. Honestly, because if it wasn't for journaling, I would most likely not be a profitable trader right now. So I encourage I encourage investing into a journal, an automated system. I personally use TradeZilla, and I just think it's a great tool. It's very useful because it shows you a breakdown of the important things like, I mean, the amount of trades you take, obviously that's important. You don't want to, if you see that you're trading, taking 50 trades, maybe a week or 60 or 70 trades a week, then I mean, maybe you could be profitable, but I guess it depends on your strategy. I don't want to judge anybody, but at the end of the day, you don't want to overtrade, you don't want to over leverage. Uh, these are pretty simple things, but if you don't visually see them with a trading journal that shows you your mistakes or the amount of times you're trading, which you might consider to be an overtrade for the week or maybe for the day. Maybe you want to put a limit on the amount of trades that you take for the day and whatnot because it is just, the right thing to do for your edge. There's a whole bunch of ways that you can operate your trading business because it is a business at the end of the day. It's almost like a casino, the same way that Mark Douglas said it. It's similar to a casino. You accept the risk just the same way that the casinos do. They accept the risk. Obviously, before they put the monies in the slot machines and stuff like that, everything's already pretty much risk assessed. So they can't they're not gonna go bankrupt for the most part. I mean, if they've created their business model the right way with proper risk management. Because obviously they know that there are going to be a few winners. But yeah, I mean, again, journaling. I'm gonna keep on preaching journal because journaling is important for you to know about. It is something, and don't mind the pimple patch. Do not mind the pimple patch. I think trading, journaling your trades is an important aspect of conducting your trading business. It shines the light for you so that it literally just tells you Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, right? These are the amount of trades you took. And you can literally click each and every day into each and every day and see how many times you trade, what did you trade, how much did you risk. It also gives you an equity curve. I love equity curves because it tells me if I'm in a positive slope or a negative slope. Don't want to be in the negative slope. Obviously, you want an uptick. You want to be in um an uptrend for your equity curve so that you know you're doing something right. And then you can double down on what you're doing right. For example, risk management. I used to risk 15%. Then I started dumbing down my risk from 15 to 10%. Now I can see that I'm risking less. Obviously, I'm risking less. And I can see that on my trading journal that I'm risking less because I'm not uh blowing my account as much as I was with 15%. Then from 15 to 10%, now I'm like, okay, well, how else can I improve? I mean, I don't want to go down to 1% like these people who are trading ICT and stuff like that. I don't want to go down to 1%. I mean, clearly there's got to be something that, I'm not even gonna, put stuff out there about, the way that you guys are trading, but obviously market structure is the biggest idea here. Because risking 1 to 2%, to me, that just doesn't sit right. I don't feel like your account is gonna go anywhere risking 1 to 2%. It'll take you a very long time to get from point A to B. But, it's a personal preference. If you want to risk 1, 2%, risk 1, 2%. Me personally, I'm risking 5 to 7%. Why? Because I see the people in Miami, Alex G, I see Q Banks, I see all these other people who actually have what I want, and they show exactly how much they're risking on a percentage level. They say I'm risking 5%, I'm risking 7%, I'm risking 6%, right? For the most part, that's really Alex G. But Q Banks, he's more of a dollar figure person. He says, okay, I accept the risk of X amount, right? 50,000, risking 50,000 or 10,000. I don't go by, percentage. That's what he says. Um, I personally would rather do the 5% versus the dollar figure just because it's more of a constant, consistent, trackable metric. And I'm in the insurance industry, so we gravitate towards, a metric to where we can see, CPA and stuff like that. So that's why I think the percentage is something that I gravitate to and I would stick to rather than choosing a dollar figure that I'm accepting to risk for a reward. I would rather do the percentage rather than a dollar figure. But I mean, biggest things this week again is journaling. I mean, I always journal. I've been journaling since January, and you guys can look back at all my videos to look at, how the improvement has been. I'll show you guys the improvement as well um on today's Zoom call, share my screen. And I think that was the biggest thing. Also, obviously waiting for better risk to reward opportunities. So instead of trading a 1 to 1, instead of trading a 1 to 2, I am not entering a trade unless it's at least a 1 to 3. If it's not giving me a 1 to 3, at least the bare minimum, then I'm not going to enter the trade. And it's that simple. So I there's not much else. I mean, obviously, I trade market structure. I mean, I use a fib retracement. Um, I'm just now more consistent. I use 1 to 3, a minimum of 1 to 3 risk to reward. Um, Risk management is better. So I'm just consistent, I'm more disciplined, and I'm waiting for these things. I'm obviously using my trading alerts. I'm not really using the order limits just because sometimes the spread opens up and I want to be prepared for if the my brokerage for whatever reason opens up the spread and for whatever reason I might get, taken out just because of a stupid spread. So I'm not really an advocate for order limits. I would rather set 3 alerts in a same like a in an area of interest, like 3 alerts, set my alarm for London session just in case, things like that. I'd rather do that, download this other app so that just in case I don't hear TradingView, I hear the other app alerting me that prices, hit my area of interest and stuff like that. So that's my type of way that I trade so that I'm aware of where price is at and then I can look to see if price is interested in going in my direction. If not, and it's like heavily going the opposite direction that I want it to, regardless of it being in the area of interest, I'm gonna sit it out, So I mean, that's pretty much it. I mean, I've read the compound effect. Like, the compound effect is I'm looking to scale. Like, that's literally my goal. My goal is to scale, especially for this year. This year, it could be a big year, a big opportunity for me to scale because I'm more grounded, I'm more consistent, I'm more disciplined, and the risk to rewards that I'm looking for makes sense. Just in case, I go on a losing streak. And obviously nobody wants to go on a losing streak, but you always want to have that just in case aspect into your trading plans and stuff like that. So let me let's see, trade. I'll also log into my live trade locker account and I'm gonna share my screen. All right, so here, let's take a look at my trade locker account first. All right, so here we are. We're looking at my trade locker account. So my balance is at 206. I was at 290 when we were in gold, but when gold did a pullback, I exited. I did a small re-entry on 2 positions, but then I pulled back out just because price didn't seem like it was interested in going back up in our direction. So up $83 for the week, and it's Monday, right? It's Monday at like 8 p.m. I think there's a lot of opportunity right now. I can't lie. It seems like there's a lot of opportunity. So from 160 to $200, how big of a percentage do we jump? Let me do that calculation. It's 160 to 200. That's a 25% increase. It's a 25% increase, right? So with us having a 25% increase on a $160 account, just imagine a 2500 25%. So 25% increase on a $160 account. Imagine a 25% increase within a week or two. Just imagine a 25% increase on a $100,000 account. That's 25,000. So if you start looking at like, picturing risk to reward and just the consistency of being a profitable trader, if you look at it differently, then your mind will start to open because it's like, okay, well, if I could do 25% on 160, I can do 25% on $100,000 account. And obviously with prop firms or live account, it doesn't really matter. It's the same thing. It's all numbers, risk management. We're in the risk management industry. So once you get that through your brain, then that's for me what started to click. What started to click for me was that we're in the risk management industry. And if you're not risk managing properly, you know, uh, using proper risk management according to your equity, um, then you're not you're not gonna, you're not gonna be successful in this industry. And most people aren't. Most people are emotionally attached to the money. Most people, they see red candles and they start freaking out. They can't enter swing trades. They'd rather scalp. I personally don't care. I've been hurt in the markets way too many times, and I've been hurt in person way too many times. And I've been screwed over $5,000 on business deals. So it's like nothing's hurting me. So my heart it's like, I don't want to say I'm cold-hearted now. Obviously, I have feelings, I have emotions and stuff like that. I have sympathy. I sympathize with people. I'm just It's been 6 years in the markets. Aside from the 6 years in the markets that I've been, lost tens of thousands of dollars, I've also had, um, I mean, I'm not gonna say heartbreak, but obviously, yes, heartbreaks and stuff like that in life. There's also business, deals or, getting screwed over in business. It happens. It is like a catalyst that you have when it comes to your, what can break you emotionally and stuff like that. So, with that being said, here we are now. So, we're present, we're in the moment, live in the markets, in the flesh. It's June 23rd, Monday, 8:26 p.m. Now, this week, again, what do we do today? So, today we did $38. This week we did $83. We're up 25% on the account. What's 25% on a $500,000 account? Amount, 500,000. 25% increase. That's a 625,000. So that's $125,000. I could have made $125,000 on the trades that I've had over the past week or two if I only had a $500,000 account. That's crazy, right? That's like ludicrous. Like, what if I had $1 million account then? Right? You're telling me that I could have made $250,000 in the past like week off of just knowing risk management. It's like a no-brainer. I don't know why, like, this is not, I mean, obviously we know why it's not taught in school, but moral of the story, I'm gonna refresh my screen. We could look at my P&L. Obviously, since I started this account, I'm still negative, right? Negative 270, 2764. Not a big deal. My daily win rate is 25%, or trade reflects the percentage of your winning trading days out of a total trading days. Trade win reflects of your winning trades out of total trades taken. Okay, so I got a 20% win rate. Not worried about that. There's people that are, um, not profiting, what? Not have a lower win rate and they have a higher profit or higher, more reward than what they risk, obviously, with power risk management. But what I'm trying to say is it doesn't matter if you have a win rate lower than 20%. You can still, in the end, be a profitable trader. So yeah, I mean, compared to, these other trash months, I mean, these were not like I would disregard $185 profit day, $155 profit day because I was risking a huge amount. Look, I'm risking $33 probably on a $200 account. Like that's like that's improper risk management. Everything you see here is improper risk management. I didn't start using proper risk management until it got to maybe like month. Honestly, I want to say like mm, I mean, maybe last month. I really don't remember when I started implementing 5%. Maybe May or this month, 5%, like strictly 5%, 5%, 5%. So yeah, you can see back to back almost $45 profit days between Sunday and Monday. So I held on to trades here. I was in a USD CHF trade, closed that out positive. AUD CAD, closed that out positive. CAD JPY trade, closed that out positive. Closed that out negative. And then today, closed that out GBP CAD short, closed that out negative. USD CHF positive, gold positive, USD CHF positive. So that's how we're looking. Next, let's jump into the charts. So for what we see here, we were long on gold. We were long on gold. Now, there's a possibility that, I mean, is there a possibility for gold to actually do this? I mean, if gold does this right here, this 1 to 5, I'm gonna actually be surprised. I'm not gonna be super surprised, but I'm still gonna kind of be surprised because I was in this right here. But am I gonna be upset? I mean, I'm not. Since I'm not surprised, I wouldn't really be upset. Let's look at other stuff first before we consider that buy. I mean, the time is typically a sensitive time for catching moves on gold. Um, Here, let me put a alert here. There's a high probability that this is gonna happen because I know this was an important price point for gold to, start making a move to take out, create a new high. Um, Man, really didn't want that to happen, but it's all right. Stuff happens. No, but if this happens though, I might have to enter. I just might have to. I do want to enter on the pullback though. I don't want to just enter randomly. All right, let me hurry up so we can scope the scenery out on gold. All right, so we've got that. I mean, US 30 is at a good selling point. Really is at a good selling point. I've got an alert literally right here for US 30. We've got a Euro JPY. All right, we've got to move on Euro JPY. With this move on Euro JPY, we could take this move. The reason I say that also too is because it's a JPY pair, which is Asian session, right? If we're in Asian session, I'm gonna move this up here, right? Potential opportunity, we're gonna make it green. GBP USD US 30 is also a potential move. GBP JPY, GBP NZD, AUD NZD, USD CAD. Okay, we've got NZD USD. I mean, we need the pullback. We need the pullback here. Euro USD, USD, JPY. I'm gonna move this here. I'm gonna make that yellow. Should have put it green, honestly. I mean, I was in this, but I came out. GBP, AUD. All right, well, I mean, the daily indicates there's not really a daily structure point for us to look at. I don't really trust this GBP AUD trade. I mean, I would probably wait until price got to this just because of the imbalances here. AUD CAD. I should have went for buys, but I mean, I got a good amount of money out of the markets from AUD CAD. Uh, 4 hour time frame here is bullish. And then if we think about the other like Euro JPY or USD JPY is bullish. which one can we make the most out of, right? We can make a good amount of money out of USDJPY. I need the best risk to reward. This one's ready, right? This one's ready. Like I can't argue with this because it is ready. But then again, is it though? No, it's not. Why did I think it was ready? Honestly, I don't know why I thought Euro JPY was ready. It's literally not even ready. Like honestly, it's not. Like like you're joking. It's literally not. This bothers me because this just shows me that gold is most likely going to start buying. This actually bothers me. Like, this is almost pushing me to go back in for gold. And I honestly don't want to, but NZD UST. All right, NZD USD. I'm gonna leave this alert here. So we've got, let's do green. I'm gonna put, I don't see any like really gaps. I mean, there's a gap right here, but I'm gonna make this red just because I'm not really interested in that. BTC USD. This is a huge 15-minute candle. I honestly would not be interested in that. Like like at all. Because it's like it'll give us a bad risk to reward. Let's look at this 4 hour time frame on US. So we did shift bearish, by the way. And not interested. Just not. Just not interested. Not interested. Just not. I'm just not. 15-minute candlesticks. I've got that price alert right there. We've got some movement here. GBP NZD right there. GBP JPY right here. Okay, we've got US 30. So I'm gonna make this green. We've got potential opportunities sitting right there. Now we've got GBP USD right there. And then I'm gonna move this here up. Now, why didn't gold? Like, is gold gonna break through or no? Just be honest. I mean, and like if we can get a 50% retracement, that'd be wonderful. Is it gonna happen? Gosh. I mean, I want it to. But then we gotta also think about these right here. Like, this can be a crazy risk to reward, right? So we gotta pick and choose. We just have to pick and choose. We have to. Like, we have no choice but to pick and choose. And and all right, y'all. I mean, there's really not much to look at other than these right here. Look, gold is about to spike up, and I'm wondering if I need to wait until 9 a.m. or what the case is. It's like I don't like let's wait for a 2 minute candle closure here. Because there's a possibility price could just literally wake up and then shoot down. So I'm not having that. I'm not having that. But yeah, I'm gonna just quickly explain what's been uh my change for how I'm becoming profitable is obviously risk management as one. Two is discipline. Three, similar, consistent. So my discipline stems from, I would say, what I mean by discipline is every day I show up. That's discipline. Discipline is showing up when you don't want to. So my discipline is checking in on Sundays, regardless of how I feel. It's my duty to show up in front of the market and mark up trade ideas. That's what I mean by discipline. Looking at what the market's been doing during Asian session, looking at the market sometimes during London session, if I'm up, looking at the market New York session. So it's showing up. That is my discipline, even if I do not want to. I'm doing it regardless of how I feel. Consistent is me uh consistently risking 5%. So on a normal basis, every time I'm looking for a trade, I look at how much I'm risking. So I'm consistent with the way that I assess my risk because every time I'm looking for a low risk, high probability trade setup. And that brings me to the next one, which is uh I want to say a minimum 1 to 3 risk to reward or risk to reward. That's also changed for me. It before it was about like 1 to 2. I didn't really care. Now it's 1 to 3, strictly 1 to 3. I would also say, I don't know, maybe reading more, I guess. Reading more. Um, no over leveraging, but leveraging. This is pretty similar to risk management. It's also pretty similar to discipline. It's also pretty similar to consistency. So I'm not over leveraging. That ties to mainly ties to risk management. And then I would say using alerts. I do use my alerts. So you probably have to, if you don't have a subscription with trading view, you might want one. If not, I'm sure there's like apps that are free and stuff like that, or one-time pay apps where you can just, invest into it so that you're able to know where price is at certain times and stuff like that when price comes to your level. So keep that in mind. These are all of the things that have been helping me at this point of me becoming profitable. Um, I'm still obviously on the way to 1,000 with this $160 account. Right now, again, it's at 206. I'm not in any positions. You don't see any orders right now active. So, let me know in the comment section if you guys have any questions for me. I am glad you guys have been able to attend this and watch this video. Like, comment, subscribe, join the Discord to be a part of the journey after I do the 160, after I hit the 160 to 1,000. Um, what am I gonna do? I'll keep you guys updated because I know what I'm gonna do, but I will keep you guys updated. Follow the journey. Follow along. You guys are literally gonna be able to take my ideas and implement it into your system. Because if I can do it, you can do it. And if these other successful people who are trading can do it, then we can do it. And if we can do it, you can do it. There's no reason why we can't do it. We have literally, like, we have opportunity in our faces 24/7. We need to take advantage. There's an abundant amount of just liquid cash that's sitting out there in the market that we can just walk over and pick it up as long as, the opportunity presents itself and we consistently keep up with proper risk management just in case for whatever reason the odds do not go in our favor. That's what's been working for me. Proper risk management consistently and risking that certain amount just in case I'm wrong, just in case there's not enough buyers to push price up in the markets for where we want price to go, or just in case there's not enough sellers to push price down into the price that we want. Just in case. Just in case. That's the word for the day is the the slogan for the day is just in case. Just in case for whatever reason price decides to do this, right? Just in case for whatever reason XYZ, the market does XYZ, which doesn't align with our belief or your belief. So I hope you guys enjoyed this video. I hope you guys learned something new. Um, Always remember you can do whatever you want. The sky's the limit. Um, like, comment, subscribe, join that Discord, link in the bio, follow the process, follow along, and thank you guys for watching. Hope you guys enjoy your day. I'll see you guys on the other side.